Hello and welcome. You're watching Market Fatafat on ET now with me, Sneha. With me is Vinny Motiwala. Vinny, wishing you a very good afternoon. Now, this is a show where we're going to take you through all the stocks that are making the buzz in today's trading session in a minute or less. So, before we kickstart the show, Vinny, let's take a look at the markets because dilly-dallying between the red and the green, but looking much better than what we were seeing in the morning at least.
Absolutely, but at one point of time it was at those, comfortably in the green, then gave up, and then we've seen that a bit of a move coming in around just that level. We are seeing 24,520 and around that market's what is roaming at right now. Trying to make a comeback to the green side is what we're watching out for. But yes, 24,520 is what the Nifty is managing to hold on to right now. Other than that, the Nifty Bank just moved into the positive side right now. 0.08% uptick for the Nifty Bank. What's doing well today? The Nifty Mid Cap pulled that up. That's up almost 1% and 1.5% approximately. Small cap up almost 1% as well. So yes, performance in the broader markets, that's managing to remain steady since the get-go. A lot of movers in trade today. We are seeing something like the fertilizer names. So Rashtriya Chemicals, we have National Fertilizers, Madras Fertilizers. These fertilizer names are chopping up away in trade today. Look at it, 12% gains for National Fertilizers. Rashtriya Chemicals, that's RCF, that's also managing to hold on to very good gains. So yes, that's where we're seeing a lot of gains coming in. And some of these spinners, Nahar Spinning, Nitin Spinners, from the textile side, that's managing to hold on to gains. A lot more movers are there in the trade, also on the back of earnings, news flows coming in, and that's what we'll be taking you through in the next 1 hour as well. But the markets as of now, broader markets are surely outperforming in terms of the benchmark indices.
Absolutely. So broader markets lending support as of now. But with that, let's kickstart the show. Let's welcome on board Aditya Agarwala, the head of research and investment at Invest4Edu on the technical front, and we have Ansh joining us from the research team as well. Good afternoon, gentlemen. Let me kickstart the show with the first stock. I'm going to talk about Dodla Dairy, and earnings candidate numbers came today, just a few hours before, and a very good set of numbers coming in. Let's take a look at the earnings fine print then. Revenue has come in at 912 crore rupees versus 823 crore, which is up 10.7% on a year-on-year basis. Now, when you take a look at net profit, that has come in at 65 crores versus roughly 35 crore this time last year. A very massive uptick of 86% coming here. EBITDA also has expanded sharply at 105 crore rupees versus 60 crores, up 75% year-on-year. And EBITDA margins have also expanded very sharply. Very smart move coming in on the margin front as well at 11.5% versus 7.3%, which is up more than 400 bits on a year-on-year basis on the back of a very good set of Q1 numbers coming in. Dodla Dairy as of now almost 7.5% higher, but at one point it was as high as 12%, and that's the spike you see when the numbers came out today during the middle of the trading session. But well, yes, very good numbers coming in for Dodla Dairy.
Okay, that's Dodla Dairy for you. Let's move on to the next stock. And Aditya, good afternoon. The first stock that you picked out for us today is Alkem Labs. On the charts and technicals, what's the word coming in for Alkem Labs? Are we expecting a run up here now?
Good afternoon, Vinny. Thanks for having the show. I think so. It's time to look at these pharma and hospital stocks again, diagnostics as well. Stock has taken support at the neckline of a falling wedge from which it had broken out a couple of weeks back. And the pullback, stock has taken support at the neckline, which is somewhere around 5,100 to about 5,050. And from there, it has resumed an uptrend on good volumes. So that is a positive trigger. And plus, there has been a confluence of moving averages as well around those areas of 5,100, 5,080. From there, stock has been inching higher. At current levels, I think it offers a great risk to reward ratio and easily can test levels of 56 to about 5,700 on the upside. On the downside, 5,100 remains a very strong support area. Plus, the moving averages and the RSI and MACD all confirm that the bullishness is still intact in the stock. So it's a positive sign, and 5,600 will be the target, 5,100 will be the stop loss.
Surely keeping an eye out on that. But let's move on and talk about Wipro. Now, this IT company, very different from a TCS and an Infosys in terms of the numbers reported. Wipro's numbers were below estimates. As of now, Wipro's stock is trading almost near a 10-year low as well. We are seeing it in terms of an intraday move. It's down almost 9% in a trade. So yes, not much of an enthusiasm that came in from the street also after its numbers. When you're looking at it, what brokerages are also saying now, Citi has maintained a sell for Wipro. They've hiked the target price to 495 from previous target price of 455. But yes, that price is also still below that 505 is what Wipro is trading at. What Citi highlights that for them also the numbers were below expectation, which is implying a slow recovery, and Wipro's growth is quite differential versus the peers, and also they see in terms of valuation also differential. So that's what they're keeping an eye out on. They said that the factor that is what they're highlighting also is that no early signs of recovery, and the stock has seen a jump up of almost 27% in the month of June. Other than that, Morgan Stanley also continues to maintain their underweight rating. They said the revenue growth gap versus peer also continues, and they expect Wipro to continue to lag versus its peers in terms of a growth in the near term, and this would keep the PE multiples at a steep discount versus the peers. They see signs of recovery, maybe some bit of a tailwind coming in, but Wipro needs better execution to come in to benefit the company in terms of moving forward and the growth moving forward as well. But on that note, also listen to what the management had to say in terms of overall the incomes as well as what they are expecting in terms of the growth strategy going forward. Listen in.
We have already given the guidance for quarter two, which you are aware of, minus 1% to plus 1% in the constant currency. We also if you look at quarter one performance, Americas 1 continued to show growth. If you look at Capco, it continues to grow. Americas 2, if you look at the growth-wise, it's been sequentially declined. But having said that, the bookings have been plus 12% sequential. So that gives a good runway and momentum going into the midterm. In terms of the industries, if you look at banking and financial services, especially reflected by Capco's growth, again sequential growth in the last 2 quarters as well. And we see that being lot more secular both in Europe and in BFSI in Americas. So that gives us comfort in terms of how the banking financial services market is actually proceeding. We have seen consumer business and communication business in Americas 1 actually started to show green shoots for us in Americas 1. Last year we had healthcare actually doing very well in Americas 1. And if you look at Americas 2, we have done one couple of deals in manufacturing and automotive segment, which is again gives you a momentum within Americas 2, in addition to the banking and financial services. So I think it is also by industry within each of the markets that we operate on, and Europe and APME has been a little soft.
All right, that's the word coming in from the management at Wipro, but let's keep it going with all the buzzers in today's trade. And Ansh, you've picked out Indian Hotels as your first stock, and earnings candidate numbers came over the weekend, so take us through the earnings fine print.
That's right, and the stock is up actually 8% in trade today. So they have reported revenue of 1,550 crore, which is up by 5.7%. We are seeing good jump in net profit also by over 10% from 236 crore to 260 crore. We are seeing some improvement in EBITDA margin from 28 to 29%, whereas EBITDA has also seen good uptake of around 9.6% from that 410 crore to 400 and almost 50 crore. Also, if you see on chart, then the stock has actually snapped its 6th session losing streak. It has also given a breakout from its downward sloping resistance and has also surpassed above its 50 and 100 EMA. And today the stock has registered its biggest single session gain in over a year. So for those reasons, the stock is in focus today.
Okay, but on that note, also listen into what Puneet Chhatwal himself had to say in terms of the projects they're expecting that are lined up going forward as well. Listen in.
We have a lot of exciting projects under development, be it the development of islands in Lakshadweep, or be it business and city hotels like the Combo, a 750-room property with 400 rooms Vivanta, 350 rooms Ginger with the Bangalore International Airport, where we already have a 400-room, approximately 400-room Taj. Strategy remains to have complete dominance in the Indian market and strategic presence with the Taj brand in the international markets. And in the international markets also, we should be opening close to 7 hotels over the next 24 months, which includes Dhaka, which we were missing, as one of our important neighboring countries, to all the way to Frankfurt in Germany.
All right, that's the word coming in from Puneet Chhatwal of Indian Hotels. But viewers, tell you what, on that note, we'll slip into a very short break on this edition of Market Fatafat. More stocks and big buzzers in today's trade on the other side of this break.
Welcome back. You're watching Market Fatafat on ET now. Let's keep it going with all those buzzing stocks. And Aditya, the next stock that you've picked out for us is Avanti Feeds. This one specifically since June has seen a sharp jump up coming in. And since then it was roaming around at those 600 levels. What is the word for Avanti Feeds? Are we expecting a sharper move now?
I think so, Vinay. I think it's time to look at Avanti Feeds once again, enter into a sideways consolidation, as you mentioned, after that sharp up move. And now it's getting up to for that big breakout again from that sideways consolidation. The upper end of the consolidation range is somewhere around 630, 635. A sustained trade above that on good volumes, I think so, will propel the stock higher, at least to levels of 700 or 720. So that is the kind of big up move that I'm eyeing on the stock. And on the downside, 600 is an immediate support level. If I plot a MACD and an RSI, both are showing a positive crossovers with their respective trigger lines. So I think this is the right time to get into the stock because the volume buildup is also happening. And with a good stop loss at 600, which is just 20 rupees from here on, I think it offers a good risk to reward ratio as well.
Alright, so those are the levels to watch out for Avanti Feeds. Ansh, you've picked Oberoi Realty and good set of numbers, isn't it?
Good set of numbers. So the stock is up 5% in trade today. Yes, they have a reported revenue which is up over 50% from that 910 crore to 1450 crore. Also, if we see net profit, that has also jumped by over 80% from 321 crore to 584 crore. If we see margin, then that has also improved very much from 52% directly to 58%. EBITDA has also seen good improvement of 72%. Also, if we see on chart, then the stock has been registering its single biggest session gain in over a month. Also, it has given a good breakout from that horizontal resistance of around 1735 level.
Okay, keeping an eye out on Oberoi Realty over there. But let's move on and talk about Cyient then. And Aditya, what are the charts indicating for Cyient?
I think it's time to look at Cyient, Vinny, within this space. This is one stock just clearly underperformed the sector while rest of the stocks have been going up. I think it's time to look at the stock getting up for again a breakout from a sideways consolidation. We call it maybe an inverted head and shoulder also I can call it. And a sustained trade above maybe a 1900 or between 1900 to 1940 is the immediate resistance. If it sustains above that level, I think so stock can test levels of 2300 as well. On the downside, 1800 is a very strong support area. And volumes have been quite encouraging in the recent bull candles. So overall, I think so it's time to look at Cyient now and maybe take a larger chunk of position here. Stay invested for some time. I think this is more of a positional trade for a target of 2300 on the upside.
23 on the upside is what one could expect from Cyient. Let's move on quickly and talk about Reliance. Now, they reported their numbers on Friday. Not much of an excitement that came in for Reliance. It was a miss from what the street was expecting. That is why the stock is down 3% in trade. The revenues overall were down by almost 2%. Margins also seeing a contraction this time around, and profits down almost 20%. Specifically, when you're looking at it in terms of O2C business, that was a miss. Retail business was a miss. Gas exploration, that managed to come in line, while telecom business was also in line with what the street was expecting. Now, after this, we've seen a brokerage note that's come in from Antique. They've downgraded the stock to a hold from a previous buy, and target price of 3,268 rupees per share is what they have highlighted. But yes, that's what we're keeping an eye out on. They said the GRMs were hit the segment overall. In terms of the digital services, also that remains stable, and tariff hike impact from the next quarter is what they're expecting, though they've cut the FY25 EBITDA estimate by 5%, mainly on account of poor O2C earnings. But yes, that's the view coming in on Reliance in terms of numbers and brokerages. But Aditya, on the technicals, Reliance, what's the word there?
It is weak, Vinny, no doubt about that. But I'll stick my neck out and would like to add the stock in my portfolio. If you're looking at buying Reliance, maybe today is the right opportunity and the correct opportunity to buy the stock in your portfolio. It's down 3%, very close to its key support area of 3,000 to about 2,950 on the downside. And I think risk to reward is in favor of going long at current levels. You can look for a target of at least 3,300 or 3,400 on the upside in next 1.5 months on Reliance Industries. And I think if it enters into a sideways consolidation, Vinny, at current levels, I don't see too much of a downside in Reliance from current levels. On the downside, 2,900 will be a stop loss, and between now to about 2,950, you can definitely look to add the stock. and look for a positional target of at least 33 to 3,500 on the upside.
Alright, those are the levels coming in for Reliance. But Aditya, I have to ask you, big event tomorrow. All eyes are going to be on the union budget. Ahead of the budget, which are the trades that are attractive to you? Which stocks are you liking at the moment?
Two stocks currently that look extremely attractive to me. One is PI Industries. The entire chemical space and the specialty chemical space has been buzzing, and PI Industries is something which is looking very interesting to me on the chart setup. After a long consolidation, stock has broken out from that consolidation phase. So at current levels, one can definitely go ahead, buy the stock for a target of 4,500 on the upside, with a stop loss at 37.50 on the downside. The second stock recommendation is Welspun Living. As we speak, I guess the stock is making day highs, and stock has broken out from a sideways consolidation on very good volumes. So I think one can definitely latch onto the stock at current levels. It's more of a momentum buy for a target of 200 rupees, with a stop loss just around 165 rupees.
Okay, surely. Those are the trades coming in from Aditya there. PI as well as Welspun Industries is what we're keeping an eye out on. But on that note, we're going to take a short break. Don't go anywhere. We'll be back with more stocks after the break.
If you like this video, then like, share and subscribe to ET Now.